Markets change nanosecond by nanosecond. Human nature hasn't changed in millennia. And so your last sustainable edge is arbitraging human nature. We've had tech, and now you throw AI, and it's a whole new world. When you do, and you've got a well-formed idea, here's what happens if I execute against this idea and I get what I want. Here are the good things that might happen, but here's the critical one. What's interesting about premeditation is it works for everything. It's not just business ideas. When we habituate ourselves to doing a thing a certain way, and we've done it that way for so long, it's really hard to not continue to think, oh, it'll come back. Another thing you need to know about me is I'm a profoundly lazy person. I always look for the easiest way to do anything. And now I had computers. That made me really dangerous. And kind of the rest is history.
Jim O'Shaughnessy, welcome to Change Order.
Great to be here, Jason. Thanks for having me.
Well, it's July 3rd when we're recording this, and you're sitting here in New York City with me while I think most other people in your position are sitting at their house in the Hamptons. So I was first wondering, like, why are you here and not hanging out on the beach somewhere in Italy?
Because of you, Jason, entirely because of you. In fact, I had to leave this incredible party just to come and do this with you. I'm kidding.
Does that say something about your work ethic, honestly, though?
Well, a little bit, yeah. You know I don't know whether you ever watched Downton Abbey, but they have the Dowager Countess. And there's this great scene where she's interacting with her new middle class heir to the big pile there, and he says something about the weekend, and she looks at him and she goes, "What is a weekend?" And I kind of, look, I love what I do. And so I really don't think about like this. This isn't work for me. This is fun.
It's kind of like that Confucius line, right? If you love what you do, you never work a day in your life.
Exactly.
And you're still feeling that way.
Yeah, I really am. And with O'Shaughnessy Ventures, it's great because I've always been really interested in every one of these verticals. So, for example, most people didn't know because we didn't advertise it, but we'd been doing venture since about 2006, 7. And just because I was fascinated by it, a completely different kind of style of investing. But I've always loved books, so we have a publishing company. I've always loved movies, so we have a film company. Media, I think, everyone's saying it's saturated. I think we're just scratching the surface. Because essentially what you're going to see is we're no longer going to be captives of the normal distribution. And basically, there are so many interesting topics that are much smaller hills. So we're going to still have power laws, but there are going to be a lot of them, right? And when you start looking at the economics of some of these things, like, they are very impressive. And now, given the environment, we think that you're going to be able to compete in any number of one of these smaller hills, right? And so we're having a blast.
I agree with you, by the way. It's funny because if you study the history, which I know you're a big history buff, but if you study the history of media and you look at a company like Gannett was what? A hyper-local, audience-driven publisher. The challenge was when media started to get big and certain advertising models happened, and then the cost of creating that content went up so much, the whole model exploded. But with generative AI and all the new platforms to monetize, it's becoming significantly cheaper, which just represents another opportunity maybe to build the next gen Gannett.
Totally agree. And that's the part that I think a lot of the people, we're doing a series, what we call the Great Reshuffle. And basically the thesis is all the playbooks that used to work, like you could rely on them. They really worked, and just execute this plan and you're going to do really, really well. All of them are collapsing. And the reactions that I've seen from, because I have friends who are in the traditional playbook world, and like they're losing their minds. They're like, this worked for 100 years and it doesn't work anymore. And I'll always point out to them, well, 100 years ago, we didn't have all of these tools. The period when we had 3 networks and 2 newspapers, right? Basically, you had the 3 networks and you had the New York Times and the Wall Street Journal. Those were the national newspapers. USA Today tried, but, much more aimed at a broader, less sophisticated audience. That was the anomaly. Because, if you know history, everybody had a newspaper back during revolutionary times.
Yeah.
And by the way, they were incredibly partisan. If you go back and read the source material, it's hysterical. I always get amused by people, this is the worst environment America has ever been in. I'm like, are you out of your mind? In the 1970s, more bombs went off in Manhattan than at any other time, maybe other than the Revolutionary War, in American history. And then, you did hear about that little kerfuffle, called the Civil War?
Yeah.
Remember that one?
Yeah. I think that's why Warren Buffett actually liked the space back then, right? I think he saw there was always 2 large newspapers in every town. He went into Buffalo. I think that was a very legendary story where he bought the newspaper there, rolled it out, and introduced 2 more editions, and that became a whole other issue. But it's true, and it feels like history does repeat itself. It's just repeating itself in a very different manner these days.
Yeah, I think it's Mark Twain who says it doesn't repeat exactly, but it rhymes. One of the things that you notice if you really are a history aficionado is that whenever a new tech comes on the scene, it's got a playbook that has continued to work. So first off, all of the people who are threatened by it set their hair on fire. It's the end of the world. This is going to corrupt the morals of our children. This is going to be awful. Tons of books, tons of interviews, all of that. And during that time, which they should be spending analyzing, okay, what's going to be the way that replaces this? They're putting all of their energies into defending what I essentially look at as a corpse. And so there's a huge lag between the people who have been incredibly successful. Take publishing, right? So do you know that the reason publishing catalogs have a fall and a summer catalog? I just found this out. It's because of something that happened with the Erie Canal in 1831. And they couldn't get, they literally couldn't get the book until those times.
No way.
And we've had tech, and now you throw AI in, and it's a whole new world.
Yeah.
You literally, if I wanted to, we could do it right now. We could set up a business. We could get all of the tools that we need and get going. And that kind of environment, especially with people my age, they're just like, that's crazy. That's nuts. And I'm like, it's incredible. What are you, nuts?
Yeah.
It's amazing that you can do this with these tools, but that also changes the cost structure. So for example, with our publisher, the standard deal will be 70-30. 70% to the author, 30% to us. We'll have AI agents. If they hate AI, they can turn them all the way down. If they love AI, they can turn them all the way up. They can use those for example, they'll also have a dashboard for their book that they'll be able to look at every day and say, wow, my book 5x sales in Omaha. If their AI is turned all the way up, there'll be an AI agent scouring all of Omaha. What are the podcasts that would be good for this author? Sending the letter, right? We'd love to be on your podcast, etc. So there's just so many ways that the industry can be made just incredibly better for everybody, for the reader, for the publisher, and most importantly, for the author.
Yep. That's amazing. I want to kind of take a step back around history for a second. My senior year of college, I read a book called Think and Grow Rich by Napoleon Hill. And it's a book that studied some of the titans of industry in America. And it was defining what was the secret behind all of them. And the way I defined the secret was or is premeditations. And I think premeditations have played an important role in your career in life. What is that role? How do you think about premeditations?
So that was something that I was lucky enough to learn from my grandfather, who actually was interviewed by Hill for that book. My grandfather was very, very successful in the oil industry. He ended up giving away virtually all of his money during his own lifetime. Very philanthropic. I'm enormously proud of that, by the way. But when my grandmother died, I'm the youngest of the grandkids, and we lived in St. Paul, Minnesota at the time, and he did too. And so he was lonely, and he came over to my parents for dinner twice a week. And literally, he was really funny. But I was like, Grandfather, how do you do this? How do you do this? How do you do this? And he would actually take the time to tell me, right? And like that alone is kind of a miracle. And then I'm like, well, how do you plan out like what you're going to do? And that's where he turned to me and said, I premeditate everything. And I'm like, what does that mean, Granddad? And then he took me through it. Essentially, he's like, first off, don't let it stay in your head. It's noisy in there. He goes, if you've got what you think is a great idea, write it down. And he was really big with writing. Back then, of course, it was just typewriters. But he said there's something particularly special about the hand actually writing it on the paper. Subsequently, I've seen some scientific studies that show that that might be true. I'm waiting for them to replicate before I start citing them. Here's the trick. Go down several different columns. This is what I want. First off, when you write it, you'll know instantly whether if that's a good idea or not, right? It's like, I cannot tell you the number of times, like, I want to do this, and then I'll go and write it out, and I'm like, oh, I have no idea what I'm thinking about here. But when you do, and you've got a well-formed idea, what you do is you go down several lines. Here's what happens if I execute against this idea and I get what I want. Here are the good things that might happen, but here's the critical one. You also have to list the bad things that might happen if you get what you want. And then you also do it for if I don't get what I want, what good things could come from that and what bad things could come from that. And so it really takes on a life of its own. Because when you iterate and when you keep writing it and you keep going back to it, the clarity it brings your mind, not only for your own obsession with it, right? Like, this I really, really want. But also it opens you to learning via negativia. Because most people don't write about the bad things that might occur if they got what they want, right? That's a very unusual thing to do. And yet, for me, that saved me from a bunch of ideas that I really, really thought would be great ideas. But then when I look down what are the bad things that could happen, I'm like, maybe I'm a little ahead of myself here. Maybe I'm going to put this one on the shelf. But so it was invaluable to me because I guess I was a fairly precocious kid. And like these I still don't have. I'm a journal keeper, and I have my journals going back to when I was 18.
Wow.
But I also my mom had given me, and I didn't call them journals. They were like notebooks in which I would write things. And I'm so sorry that when I moved east in 1991, they got lost, but they were hysterical.
How often do you do this exercise now?
Anytime. Well, so for example, let's use O'Shaughnessy Ventures. There were other verticals that were considered, and it was the premeditation that put them on the back burner. I'll give you an example. One of the verticals was going to be what I'm calling gray swan, right? So everybody knows what a black swan is, and by definition, a black swan is something nobody can predict, right? So I started thinking, well, you can't predict them, but I bet there's a way you can confirm that a black swan has happened. And if you are even 24 or 48 hours ahead of everybody going, oh my God, what's going on? Like, remember when oil went negative?
Yeah.
Like, classic black swan. If you'd known about that happening even 24 hours ahead, that's quite a trade. And so that was actually going to be one of the main focuses of O'Shaughnessy Ventures, because an understandable glide path from being a quant in public markets to doing this as well. But then when I started going down the list, I realized it would consume all of my capital. Like literally, I talked to a bunch of friends in machine learning and AI, and I described it to them and what my plan was going to be. It was a very clever plan. We were going to make sure that people had allocations. The engineers who built this would get a piece of the pie, right? And when we got to a certain level of accuracy, we'd take house money, trade it, and then if it was successful, they'd get an allocation based on their contributions, right? And got all the AI guys that I talked to were super excited, and they're like, but dude, that's going to cost you like $500 million. Yes. I'm like, I don't have $500 million to do a single project.
So it turns out that venture capital is a more efficient business than your other model, which might be a first.
Exactly. What's interesting about premeditation is it works for everything. It's not just business ideas. It's like I did one before moving to the New York area, right? I grew up in the Midwest in the Twin Cities, and always loved New York City. When I was a kid, I was here at age 8, and we were taking a boat over to Ireland to live there for the summer. And we were staying, I think, at the Waldorf. And without asking my parents, I put on a little white windbreaker at 6 in the morning and went on a long explore of Manhattan in 1968. And back in 68, people think it's bad now, man.
Yeah.
68, there was trash everywhere. There were rats. There was everything. And of course, I had no idea that I was putting myself in any kind of danger. I get back to the hotel 3 hours later. My mother, I see, is on a couch weeping. There's cops everywhere in the lobby. And I don't remember this, but I feel like I do because she told me the story so many times. She said, I saw you and your face lit up. And you ran over to me and said, Mommy, don't worry. I love it here. In fact, I'm going to live here someday.
That's funny.
But then it comes to be 1991. I'm like, okay, let's do a premeditation. What happens if I go and everything works great? What bad happens? And then what happens if I don't go? What good and bad? Very heavily in the get going, buddy.
That's amazing. I was listening to a podcast, by the way, between you and your son, Patrick, from 2017. And in it, he talked about how you two are aligned in every investment philosophy and a lot of like life philosophies, but the one that you're not aligned with is premeditations.
That's right.
Why do you think premeditations didn't resonate with him?
So Patrick is well, first off, let's level set here. Patrick got a degree in philosophy from the University of Notre Dame, right? So he had what I considered more elaborate methods for looking into things. I didn't think they were bad. I just thought, well, that's a lot of extra work, Patrick. I mean, do I really need to consult Kierkegaard and Wittgenstein and like all of these thinkers? But that worked for him. And so I'm very much a believer in like George Box, right? All models are wrong, some are useful, right? And so no particular model is going to be 100%, this is the best model. Depends on your temperament, your disposition, all of those things. And so with Patrick, he, at that time, was much more into the heavier lifting, let's put it that way, than I was. I haven't talked to, it's funny. We were over there for a family dinner and it came up and we didn't get a chance to talk about it, but I sensed that he was a little more open to the premeditation
You might
than he
have
was.
to ask him over the 4th of July. Like some random guy asked me why you didn't agree with me, I guess, speaking of family, I heard a story about the initial interest and what sparked your initial interest in markets. And I think it had to do with an argument you overheard between your father and your uncle. Was it about IBM?
It was about IBM. I was super excited because I'd finally attained the age where I got invited to the adult table for dinner. Now, I mentioned that my grandfather, so to put it into context, at one point in the 1930s, his Globe Oil Company was the largest privately held oil company in the world. They actually lost the antitrust suits, even though they had Wild Bill Donovan, the founder of the OSS, which became the CIA, as their lawyer. They lost. And but he ended up being super successful, but then gifting through philanthropy the money away. But the part that he didn't manage to give away went into a foundation. And my dad and his brothers and sisters were the trustees. So they would meet quarterly and discuss, grants, investments, things like that. Well, at an Irish family table, if there are 10 people sitting there, there are 12 opinions. and so they were really passionate, right? Like arguing, that isn't the way you decide whether IBM is a good investment. No, you've got to look at who the CEO is. You've got to look at his background. You've got to look at, what their plans are and all of this. And I sort of listened, and nothing ever came up about numbers. And so finally, about a half an hour in, I said, Uncle John, wouldn't it make more sense to just do a financial analysis? Look at what you had to pay for every dollar of earnings or sales or EBITDA? And he just looked at me and remember, this is 1977, right?
Yeah.
So nobody knew what factor investing was. Nobody knew what Quant was. Basically, it was, I'm smart and I pick good stocks, and we all know where that got us. And so the next weekend in St. Paul, there is a library called the James J. Hill, the railroad baron, gave a beautiful research library. And so I went down there and I thought, you know what I'm going to do? I'm gonna show my uncle that he's wrong, and I'm gonna show him that doing financial analysis, doing factor analysis, is going to be vastly superior because it removes the biases and all those types of things. And I was very ambitious, and I was originally, the old S&P Terror books. You probably don't. You're probably too young.
I can't admit
but
it.
they were like this thick, right? And they had all 500 companies then in the S&P 500. So I had a paper spreadsheet. Yes, I'm an old. And it was this big, right? And
That's
so
amazing.
I swan in and I'm like, could you show me where the S&P 500 book is? And they bring it over to me and I'd start going through it. And what I was going to do was list all 500 companies and then list all the relevant ratios. Another thing you need to know about me is I'm a profoundly lazy person. In other words, I always look for the easiest way to do anything. And so I thought, I think I'll do the Dow because that's only 30 stocks. Well, then I learned the Dow changes, or at that time, changes a lot. And so that got me fascinated. Anyway, I did it for the current Dow, did it for like a 10-year period. And sure enough, golly, when you paid the moon for a stock, you ended up getting crushed. And when you were very value conscious, you ended up doing better. Now, obviously, things have gotten a lot more sophisticated since then. but I was hooked. And now I wasn't a total geek, so girls were far more important to me at that time. But then I got married pretty young and had Patrick when I was only 24, and went back to it. And now I had computers. That made me really dangerous.
That helps.
And kind of the rest is history.
Wow. So how did that lead to O'Shaughnessy Capital Management? And I guess I had heard a story about a friend of yours had a problem and that might have led to it.
Yeah, I was on the board of the St. Paul Chamber Orchestra. I love Baroque music. And a fellow board member was the general counsel for a company called Control Data. That was the era of the conglomerates, right? Where people were like buying madness and they would buy this company or that company, even if it did not fit in any way, shape, or form with their central mission.
The old GE.
And exactly. And so we were at a dinner and he's like, hey, somebody told me you're doing like really in-depth stock market research, but it's all like quantitative and it's all like trying to figure out companies from what really defines them as opposed to who might be the chair or CEO. And I went, yeah. And he goes, could you do that with money managers? And I went, absolutely, I could. And he goes, because we have, I think, 7 different managers. And he goes, I'll be frank, I have no idea whether they're doing what they say they're doing. And thus, O'Shaughnessy Capital was born first as a consultancy.
Interesting.
So Control Data hired me. I went in and created what were then called, I think are still called, although they're a bit out of favor now, normal portfolios. What's a normal portfolio? You take the stocks in the manager's portfolio and previous portfolios, and you do a factor analysis of them. So what does that mean? What's the PE ratio? What's the price to book? What's the EBITDA? All of these things. And what that allows you to do is create a digital twin, to use a modern term. And the normal portfolio was exactly that. You would extract from the manager's portfolio all the most significant deviations from the average stock, right? So if it's a small cap growth manager, they're going to have big earnings. They're going to have not worrying too much about valuation, all of that. And if it's a value manager, the opposite, right? But that created the ability to clone them. And so I would create a model, which at O'Shaughnessy Asset Management became the models that we use to select securities, but of that manager. And then we would have the Quant model pick a series of stocks that had all of the same characteristics as the manager. And the goal was, does this manager add any value at all from their buying and selling? Spoiler alert, very few do. And so we did that for several years, and that just got me absolutely obsessed with, okay, there is talent. How do I isolate it? How do I emulate it? How can I clone it? And then you get into, well, maybe I don't want to just clone it. Maybe I want to improve it. And so that shifted my thinking from, hey, give me your favorite manager and I can clone him or her, right? So I wrote a book called Invest Like the Best. Patrick's podcast is an homage to that book title. And I found that, yeah, you really could improve. Because what we found was, basically we are our own worst enemy when it comes to buying stocks and selling stocks in public markets, right? Because I always say the 4 horsemen of the investment apocalypse are fear, greed, hope, and ignorance. And if you think about that for a minute, only one, ignorance, is not an emotion. Fear, greed, and hope have driven more bad decisions than virtually any other thing in investing, right? And so I thought, I think that I could really do significantly better by just taking myself out of the equation. Because look, I'm a human being, and that means that I'm running the same human OS that you are. And being aware of the problem is half the battle. It's even more than half the battle.
Yeah.
You are the genius in coming up with the ideas for how to select securities. Yes. Where you're not a genius is in execution. Because when you do an analysis of markets going as far back as we have data, all of the biggest mistakes get made at inflection points. The classic, of course, is Isaac Newton. And so one of the brightest people of his lifetime, and he lost his entire fortune in the South Sea trading bubble. And it's like clockwork. Go and look at what Newton did as a, hey, don't do this. Because he let his emotions entirely sweep him up in the entire thing. It even caused him to lament that he said, I can measure the motion of heavenly bodies, but not the madness of men. And that really stuck with me because it is our utter inconsistency in execution when emotions are controlling the show that makes all of these spectacular blow-ups basically possible. People just get like, you see it now, you saw it then. It's the one thing that is very, very consistent. And so I essentially say markets change, nanosecond by nanosecond. Human nature hasn't changed in millennia, barely moved. And so your last sustainable edge is arbitraging human nature.
It's fascinating because both you and Howard Morgan have come out of the quant world and into the venture capital world, which at first glance is a very, very different world from quant. And those four horsemen that you just mentioned are both very challenging to control for in venture capital. And sometimes hope can actually lead to great outcomes, right? Over the other things, maybe even ignorance included. When you think about your time in venture now, how do you try to think like a quant and avoid the biases?
That has been a really interesting learning experience for me because you're absolutely right. This is a completely different type of investing, right? So you necessarily have to be far more of the psychologist and far less the physicist, right? But the discipline of quant is very, very helpful. So what we do, and we've modified this significantly over time, but when I first started doing venture in 2007, thereabouts, what I would do is create a master list of like, these are the qualities for both the founders, for the product category, the industry, the go-to-market strategy, etc. And loving history like I do, I thought, okay, well, let's go back and look and see what worked. And you never want to write the specifics of like, because this worked for Google, it's going to work for, some other search engine. But what you can do is you can abstract them out. And those were the kind of questions that I wrote out. And so when I would meet with a founder, it was a very different experience. Founders have said this to me.
Yeah.
It's like a very different experience getting interviewed by you than by traditional venture people. Because I knew that I had to focus much more on, am I seeing this right? Like, am I wrong? And it's very easy for me to say, I'm probably wrong, right? A lot of people, that's their Achilles heel. Like, you've dealt with enough of those people. And so I inverted that and was like, this is going to be my superpower. My superpower is going to be like, I'm an idiot. I'm going to come to this like, I know nothing about this. What kind of questions should I ask that, like, you know the old joke. Explain it to me like I'm a golden retriever, okay? And what happens is that oftentimes the founders, like, first they're a little freaked out, but then they really relax, which is really interesting because they're being asked questions in a very different manner than the other pitches that they were giving, right? And so I try to turn them into conversations primarily because I really like to see how people think, not what they think. And so I would like throw just bizarre questions at them, like somebody with a math major. The first question I asked them was, well, you were a math major. Interesting. What's 17% of 72?
What were you trying to get out of that?
I wanted to see how they would react.
Yeah.
Right? And it's really interesting because different personality types react very differently.
Oh, yeah.
I literally had one person freeze and just like stare at me. And
Is that
then
bad?
That was not good. That was not good. Because then I had one guy and say, well, that's stupid. You can do it right on your calculator there.
That's
Great.
what Elon would have said.
Yeah, exactly. And so that person got a check plus, the other person got a check minus.
One reacted.
Yeah.
Very quick, speed, witty,
and you're also learning how people operate under duress, under stress. And it's a small stressor, right? Yeah. And so what we really value is an agile mind, right? An ability to like get asked that question. And then I also love people who just laughed out loud. And then they went into it. And then I would give progressively harder questions, which I knew they couldn't get the answer to. A little unfair, but I wasn't interested in the answer. I wanted to watch how they attacked it. And boy, oh boy, when you can watch that happen, it separates the wheat from the chaff pretty quickly. So I did get a lot of benefit from my much more systematic approach that we used in Quant, and then just modified it so that we could do it in checking personality traits. Because, like, listen, I think that in startups, the people are like, I know this is very trite and cliche, but it's true, and I think that's why it is trite and cliche. And so you got to get them right.
How important is the market structure to you?
It depends on what we're doing, right? So I've been doing a lot of investing in AI and market structure being born as we speak. So we had to rely on our best guesses on how it would all shake out. So for example, we didn't invest in any large language model companies. Why? Our thesis was that's going to be a race to zero.
Yep.
And they're going to be utilities, basically. But we were investing heavily in generative AI that could be multimodal and do really, really cool things. And then we kind of did the scenarios good, bad, and horrible for what could happen to that particular segment of the AI market. We have a portfolio company called Wand. And what Wand does is it short circuits the traditional artist's hatred of AI because it gives them a wand, right? A paintbrush.
Yeah.
And graphic artists in particular absolutely love it because they're familiar with, because they have the device. But what we're doing with Wand is letting them train and iterate with the AI on their own work.
Like a co-pilot.
Exactly. And they love it because gone are all the AI is mangling up my vision and all that. And they're like, no. It's my co-pilot. And we've talked to a couple of graphic artists. One actually did a book, and I think more than half of the images were AI augmented, but they were still him, right? And it's a bit like, how pre-AI, what did an artist do to try to get to become a better artist? Well, most of them went to museums and tried to draw these magnificent paintings that the masters had done.
Yeah.
That's what AI does. It just does it a little faster.
Yeah.
And so if you could get a segment like that, where we're back to psychology, right? Like, if we present this in the right way and with the right tools, it's going to be very popular. And so in that segment, we thought, well, market structure is being invented as we speak. Now, in other sectors, like we have an investment in a company called Furno, and it's in the old school industrial sector. But what was the twist? It's being sold to much smaller companies that allows them to maximize the yield of the things they're doing. There we want to see a much more traditional approach to the thing, because it's a better mousetrap that, if you highlight its benefits, kind of sells itself.
Yeah.
But there were much more. There we did a lot more homework. Okay, how many queries are there? How many of them are privately owned? What is the percentage of the really small ones, which are kind of the mom and pop versions, versus the big, huge companies? So it really is segment contingent on the way that we go through due diligence.
I'm super aligned with you. When we look at markets, I kind of think about incentives and ego. You're talking about art. It's like, well, is the ego of the user going to get in the way of actually doing this thing and you're using this thing? Whereas incentives drive everything around all of us.
Yep.
And so when we look at the incentive structures of certain markets, if we can drive revenue immediately to you and your company, your top line, especially as a small business, and if you're in industrials and you can save them 5-10%, that's not necessarily adding revenue, but guess who gets to take home that 5-10%? Exactly. At the end of the day, it's the small business owner, and 5-10% of a $3 million top line business is maybe 1 year of college for them and their kid. And so we try to find the markets where that is very, very clear. But what's interesting about AI, which is I think today is the best day in history for counter positioning. I don't know if you're familiar with like that term, but it's like, can we go into markets where a company charges hourly for their service? And the reason they don't want to use the AI is all of a sudden hourly, 100 hours drops down to 5. Well, your revenue just reduced by 95%. So can we build a tech-enabled service with an AI tool and then build workflow into the end customer to try to build the moat that way? Because if you can, yes, it's deflationary and it might shrink the market size, but it also might increase the amount of customers in the market. So it feels like that model to us is going to explode in the next 1 to 2 years.
We are completely aligned. We think that, again, it's like I said earlier about all the old playbooks are collapsing and not working anymore. And it's really weird to me because, like, what did Keynes say? When conditions change, I change my opinion. That's kind of the way I live my life, right? It's like, well, that used to be great, but that is not going to be great going forward. And what kills me is there's just so many examples. All you got to do is just look at the history of various industries. And like, there used to be a huge industry in New England of ice cutters, right?
Yeah.
Because we didn't have refrigeration. Everybody had an ice box, and literally they'd go cut the river and the ice, and they'd haul the ice to everyone's house, and they'd put it in the ice box. And like, that mentality, it's so funny. It gets habituated. And then, it's like Kubler-Ross's stages of grief, right? And, first they're mad, then they can't believe it, then they're trying to negotiate. And this happens in industry all the time. And so, like GE, another great example you brought up earlier, GE could have owned the transistor market, could have owned it, lock, stock, and barrel. Why did they not own it? Because their vacuum tube division was their most profitable division.
The innovator's dilemma.
Exactly.
And
the thing is, honestly, we get stupider the more people you put in the room. And you end up, if you're going for consensus, right? Like if you've got 25 people who all think that they're God's gift to investing, that consensus is going to get really muddy really fast.
It's so hard, though. I mean, you look at a company like GE, and when it's public, and all of a sudden, whoever Jack Welch's comp is based off of profitability, maybe, and all of a sudden profitability looks like this, and it's going down, and it's like, okay, now my comp's going down, and so I let the thing get disrupted. Whereas in the private markets, I actually think the interesting piece is you can have asymmetric information, you can be in the weeds, you can make decisions in a very different manner than a lot of these public companies.
Absolutely. And in fact, I think that's one of the things that really intrigues me the most about, we do mostly seed stage investing. All the advantages that these private companies have over the incumbent publics is enormous, right? What are we going to do for HR? Well, we've always done it this way. No, we haven't, because we don't even have an HR department yet. And so those minds are far more open to, well, what's currently like the best, right?
Yeah.
And I always try to put myself in, like, I've formed a bunch of companies myself, and I know what the pain points are. And so when you start looking, that's the other thing I do quite a bit. I'm like, okay, I'll talk to friends. I'm lucky to have a really big network and in people in really different fields. And I'll call them up and then try to generalize. And I'll just say, like, what pisses you off the most about what you have to do? What workflow would you just like, when you see it come up, you just want to just kill everything and throw the computer out the window? And every industry, every company, every person has these pain points.
Totally.
And it seems really simple to me that if you can solve some of their biggest pain points, they're going to really like you and they're going to embrace your product. It's not like I think there's so many misconceptions which, you got to have the perfect elevator pitch. No, you don't. I mean, honestly, some of the stuff that I read is just like, this is just dumb. Like, some of the stuff that we ended up investing in, it took us like more than 4 Zooms and really drilling down that there was no elevator pitch. You couldn't come up with an elevator pitch for that thing.
Yeah.
And so I just think that the industry is very different now, and I like where I am in it because I'm kind of the anti-VC. And by that I mean I have no LPs. It's all in-house capital. And so I don't have to, I mean, again, incentives, right? My incentive structure is vastly different than a traditional VC who's got to answer to their LPs. I cannot tell you the number of conversations I've had with other GCs where they're like, oh, I would have done that in a heartbeat if I didn't have to explain to my LPs why I did it. And, the agent principal problem, we don't have it.
It comes up so often, I think, in secondary sales. And I want to unpack some of the quant side because I think if you look back when you were doing a lot of the public market investing, small cap stocks back then were what, $30-50 million market caps at times.
Well, those would have been micro,
Like
even
micro?
then.
Okay. So
Yeah,
what were
small
small
cap
caps?
is about 200 million US and up.
And so 200 million back then, there's a lot of companies in the United
Tons.
States in private markets where like with 200 million market cap, at least from a VC valuation perspective.
Right.
I think what's fascinating when it comes to secondary sales, and we just had a conversation yesterday internally, a lot of VCs are just kind of looking at the company and not really doing the work to go create the asymmetric information advantage they have. And they're not calculating the expected value of their investments based on the probabilities of different outcomes. And if they did and they wanted to optimize for that versus maybe the TVPI over DPI, or they're going to go raise the next fund, so they want to show a little bit more liquidity, it is a very different conversation if all you're trying to do is manage risk and look at expected value instead of what's over here for our LPs.
Exactly. And again, we have the luxury of not having to do that. And so it is, all the alpha is in the things that other competitors can't or won't do. And I say can't because of the structure of their company. And we're back to publics here, right? Like you got to make it through 12 committees, and like everything's got to be, the bean counters have to say, yeah, this is a good idea, and all of that. That doesn't exist in a private company. And they can take advantage of things. And what's funny is that I've talked to friends of mine who are in public companies, and they know it. They're not stupid people.
Yeah.
Right? And it really frustrates them because it's like, yeah, no, we could never do that. I remember one time when I was still in public asset management, Robert Stansky, who was then running the Magellan Fund at Fidelity, asked me if I would come and talk to some of their people. And he goes, hey, would you give me that list of that small cap growth? I really like those names. And so I faxed it to him, again, age alert. And he called me on the phone. He's like, you know what kills me? He goes, I love these names, and I can't buy one of them because my fund's just too big. They wouldn't move the needle just slightly.
Yeah.
And so that was a huge asymmetric advantage in public markets that I was able to have. OSAM has a microcap strategy. It's amazing. It's fabulous. But we chose to offer it because we were a privately owned company. The publicly owned companies in asset management, you won't see too many microcap funds from them because they don't scale, right? And in my world, it was like, well, I can take probably 250 million in this. That's a found bunch of money. Plus, I love the category. And so we were able to do it simply because we were privately owned and a boutique.
It's amazing. To shift gears for a second, I was reading a lot about how you like to audit your own views.
Yeah.
How do you do that?
Well, so now with AI, it's a lot easier. So one of the things that I do is first I create a fairly comprehensive statement about, view A, B, or C, right? And then I'll put it into, I have access to all of the large language models, and they all interact a little differently.
Yeah.
And I will upload it, and then I will say, tear this apart. Show me every part of this argument that is wrong. And it's brutal because they're really good at it.
Oh my gosh.
And then what happens is when you get the output and you read it and you synthesize it and put it all together, you start looking like, is there any way for me to modify one of the points that are part of my dissertation about this view from what I learned by putting it through the large language model? Oftentimes there are. And so now, the perfect result is I've got a thesis. I put it at the mercy of all the large language models. I say, find every inconsistency, find every erroneous planted axiom here, and they're really good at that. And then I take that output and I say, okay, I can fix this. I can fix this. This one, I'm going to just have to leave. It's a problem. But you know, if you're not willing to risk anything, you're not going to do anything. And then I'll redo it, put it back through the large language model, and the critique gets a lot different. Like, this is actually a fairly good thesis to have, but have you considered? And then it gives you additional ideas, which is like really cool. And so what you do there is you just look at them and you say, yeah, this one really resonates with me. God, I didn't think of that one. That's great. Most of them you're like, nah, that's not great, and you discard it. But with it's like having like a room full of super smart and yet somewhat inconsistent PhDs in any topic that you're auditing, and so it gives you the ability to like steelman your thesis, and you don't get mad because it's a machine, right? Like in the old days, you might have done it with your smartest friend, and then you get really pissed, right? Yeah. Jason, I'm never speaking to you again because you called me out on this particular thing. Again, this is from my quant side. And then the other thing I do is I also, if there's something that I feel like sounds dodgy or like that sounds like grifter speak and whatnot, I steelman their arguments too. Arguments I don't agree with.
On Twitter?
I put a couple of them up. I think I put a couple of them up on Twitter.
I'll have to check that out.
The other thing that it's really good for in this process when I'm auditing my own ideas, I always try to say, what synthesis of these disparate theses might be like even better. And it's really helpful there. It's like, so I'll put them both in. They've already been steelmanned. I've already corrected them. Then I'll put them both in and I'll say, how could we combine these two things to make it even more anti-fragile? And sure enough. Now, does it work every time? Of course not. Like, sometimes you just get kind of like, well, duh. And those are things I could have seen myself. But the thing that is incredible to me about AI is like we humans, no matter how smart we are, even if you took like the 100 most smart humans, we simply can't pick the 5 similarities out of a vector containing 100 million data points. Just can't do it. And it's a breeze for AI. And so I am of the belief that what AI really is just an incredibly powerful tool for we humans. I believe very passionately in what is called the Centaur model, which is human plus machine. You're going to see over the next 10 years, like, oh my God, the tsunami of AI-only generated bullshit is just going to be, it's going to be really hard to avoid.
Yeah.
But it'll be mostly bad. The stuff that's going to really resonate with humans is the stuff where it was man, woman, plus machine. Because in there you're using the tool right? It's like the old adage, if you've got a hammer, everything you see is a nail. AI doesn't think like that. It's like, well, hey, dude, get rid of the hammer. You need a different tool in this particular one. And by the way, I would suggest these 7 tools.
I love that. I give a lot of advice to younger VCs, and I always tell them, I have a saying, which is that some of the best venture capitalists in the world you've never heard of. And the reason why you've never heard of them is because they weren't actually able to get deals done at their firms. And oftentimes it's because there's a difference between one's ability to analyze something and one's ability to argue something. And I think now that I'm hearing you say this, and I hadn't really even thought about it that way, I think every young investor that's going to present something in a partnership meeting should upload their investment memo. They should have that conversation with, ChatGPT 4.0, hear the counter arguments to really prepare themselves. Because today, what we do, at least here, I'll work with one of my junior investors, have them pitch it to me, and I'll probe at all the things that I can think of. But the reality is, you walk in that room, there's 20 other people. You're going to get questions I didn't think about, and that should probably get you more well prepared than I ever could have done for you.
Totally. And it's part of our workflow. Now, we are building out our own internal AI, and we're doing that because we want non-lobotomized AI. The idea of what they call debiasing AI, what that really means is coming up with answers that we really don't like.
I love that.
And there's a funny comedian who basically on her show says that we love to make burgers out of your sacred cows. And AI loves to make burgers out of your favorite sacred cows. And so we realized, now we use all the commercially available ones too. But we realized that we could create a significant advantage by having a completely unbiased AI. Kind of these are the facts, this is the situation, what are the most likely answers? And it's unburdened by the Overton window. It's unburdened by the zeitgeist. It's unburdened by the it thing or story of the day. And, we humans are far more interesting, but we are susceptible to all of those things. All of us. Me too. Society, and by the way, this is no conspiracy. If you study the formation of societies since the beginning of having records of them, they all develop kind of the same way. And they develop the same way because they're trying to maximize the efficiency, the power, the duration, all of those things for that particular society. Now, does that mean that a lot of the societal norms and rules that they have in place are right? No. In fact, many of them are really, really wrong.
Yeah.
Right? But nobody wants to rock the boat. And, like King so-and-so, you get your head cut off if you're a heretic.
Yep.
And so I've always kind of been a natural heretic and rabble-rouser and troublemaker. And so it's kind of ideally suited to me because I'm gleeful when I find something like that I really thought was right and I find out that I'm wrong. Because it's so cool to me because the willingness to be able to pivot and back to agility, that's what you want to see in somebody who's running the company you just put several $1 million into.
It's like the saying, strong opinions loosely held.
Yeah.
I admire those people so much.
Yeah. And I was always that way at OSAM, and we do it at O'Shaughnessy Ventures as well. At OSAM, we had what we called a research graveyard. It was all the things we researched that didn't work. And it's so funny because that's another part of being human. How many doctoral students do you know that want to propose a hypothesis that they're pretty sure is going to lead to a null set? Nobody, because nobody's going to want to publish it. It's not going to be anything. And yet you are giving up so much valuable knowledge by being unwilling to learn what doesn't work, right? Learning via negativia is incredibly underutilized. And so by keeping the research graveyard, first off, Yep, no, that one doesn't work. But then if you're curious at all, you're like, I wonder why it doesn't work. And so you start going down that road as well. And so we do the same thing with things we pass on. And like if they go on to do really well, what did we miss? And if they go on to do really poorly, what did we get right? Right? And it's usually one or two things. It's normally your entire list is not all of the reasons it went bad.
Yeah.
But the same kind of two things keep coming up on why it went bad. Similarly, the same sort of, it's a bit more than two or three on the thing that we passed on that went on to do really, really well. It becomes, oh, well, we missed that entirely, right? And, we're humans. So what we want to do, though, is just build our knowledge base.
It's so important. I find when we, or I like to say in general, that like 50% of the zeros in venture are avoidable if you just did the work, because you could have spoken to companies that have started in the space and failed. You could have talked to later stage companies just to find out what didn't work. And going back to we almost call it the misanalysis. We started this a couple of years ago, where if we end up passing on a company and they go on to raise a successful round, an A, a B, whatever it is, we actually invite in the partner from the other firm that led that later stage round. And we say, hey, we want you to walk us through your thesis. What did you like? Why did you invest in the company? And, the culture here, I think, is an amazing psychologically safe culture where it's okay to make mistakes. When we're going to swing, we just want to make sure that we hit. And so bringing them in and having that conversation, we're learning more, we're adding more data inputs into like our misses, and then hopefully making better decisions on the back end.
That's really smart to do. And again, there's a lot of reasons why people, ostensibly smart people, don't do that, right? Ego gets involved. Incentives get involved. Yeah. Not wanting to piss off the lead partner gets involved. Like, we are hierarchical beings. I did my absolute best to say, no, I'm not in any hierarchy. I stand outside the hierarchy. Well, guess what? There's a hierarchy for those guys too. And so when you read books, you see hierarchies define virtually every mammal, every insect, everything. And so rather than to be, but I'm uniquely me, you just come to the point where you're willing to say, okay, I run human OS just like everybody else runs human OS. Let me guard against all of the knowns that I can guard against, right? Let me try to improve where I learn things that I don't know. And then let me just put into the category that Penrose would call non-computable, the things that I'm just never going to be able to know. And most likely it's like, for example, in the medieval times, people used to argue over how many angels could dance on the head of a pin. And literally, they spent lifetimes having these debates. It's like, what? That's non-computable because A, we're not certain that we have angels. B, if we do have angels, we don't even know that they like to dance. Yeah. And why would they choose the head of a pin to dance on, right? And so that's a humorous example, but there are serious ones too that people spend inordinate amounts of time trying to prove a thesis or an idea that literally has no bearing on whether this particular company is going to be a success or a failure, right? And so we misallocate, neuro real estate is very, very valuable. And you want to be a cognitive miser as best as you can. And the way you do that is A, be incredibly open to the fact that you are going to make a bunch of mistakes. I look at mistakes as portals to learning, as portals to opportunity, right? Because when you make a mistake, if you're doing it right, you learn something, right? That's what a mistake is. And so this culture of like fear of failure, fear of sounding dumb, fear of like when I've tried to mentor younger people, one of the common things that I note was it was very difficult for me to get them to say, look me in the eyes and say, I don't know. Right? I don't know about like most of the things in the world.
Yeah.
And so I just always was quite willing to say, I don't know. Let me find out.
Yeah.
Let me see if I can find out. And if it's non-computable, I just put it over there. Like I can't find that out. I'm not going to waste any time on it. Like, and you'll see people obsessed by these kind of obscure things, and they're like, I have found the Grail. I translated the Rosetta Stone. Chances are you didn't.
I only have a few more minutes with you, and I want to ask you a few personal questions if
Sure.
you're open to it. So I worked for Mark Gerson before this, and I think he shaped my view on philanthropy in a big way. He's a very ROI-driven philanthropist. He likes to know if he's going to put X dollars in, what's coming out of it, Y on the other side. Mm-hmm. You mentioned your grandfather is a big philanthropist. I think this has played a big role in your life as well. What's your philosophy around philanthropy?
Mine is that I am fortunate enough to live in an era where I can find and fund the geniuses in the world. People don't realize how new and how exciting that actually is. In the old days, like my grandfather gave a lot of buildings to universities that he admired. He gave a lot to charities that help the poor, and all of those things are great. They're wonderful. But, if something was happening bad in Bangladesh, my grandfather would have no idea that that was happening, right? Because no one covered Bangladesh back then. What the internet and AI has given us is the ability to see all of these brilliant people, because most of them are posting somewhere, and you can do a scan and find these interesting ideas, and when you find them, you can fund them. That was the kernel for our fellowship program and our grant program at OSV. Like Peter Thiel, we thought youth has a lot of advantages. And by the way, we don't give them just to young people. I just gave one yesterday to a guy who was in his 50s, but oh my God, was this guy young at heart?
Yeah.
Because he was just like the most creative person I'd talked to in a long time. And I would have never found this guy if we didn't have this interconnected world that we have today. So one of my ideas around philanthropy is I want to find and empower people who it looks like are going to be able to bring something new into the world or augment something that's already in the world that could become much, much better with this augmentation, and that leads to a positive sum outcome. And therefore, our fellowships have zero strings, none. You don't have to, like, for example, we funded a guy who is making movies about deep tech founders. He makes documentaries of them. They're really good. They're really interesting. His ambition is to have a full production company that does not just those types of videos, but others as well. If he decides, and when he's going for funding, if he decides that there's somebody else that's better than O'Shaughnessy Ventures,
Go get it.
Good luck. Best of luck to you. And so what we're trying to do is kind of threefold. We're trying to demonstrate to the world that the world is filled with incredibly creative, brilliant people. Secondly, those people, if given the right kind of financing, if given the right opportunity, can blossom in a way that, had they gone up the traditional route of a particular career, never would have been able to do that. And then get that network connected to each other. That we're already seeing, and we're only in our second year here. That is amazing
I love
because
that.
you've got all these incredibly creative, brilliant people, and they're talking to each other. And the cross-pollination that happens is like incredible.
Opportunity and access is a powerful thing. Why do you think parents should have their kids Google things more?
That's from Patrick saying so I have I have a very good memory for anything I read. I have a horrible memory for things people say to me or whatever. But if I read it, I retain it. And Patrick would always come to me, and my daughters did too. And Dad, what's the answer to this? And I would never tell them. And I would say, we had a huge bookcase at the time, and I would say, look it up in there. And now I say, Google it or ask Chat GPT.
Yeah.
Why do I do that? Well, A, it gets them to have higher agency in themselves. Like, I can find the answer to this. I can look at all these books, look at all these things that I can find the answer. But it also really jumpstarts curiosity. Patrick and I were just talking about this the other day, and he's like, the thing that I really loved was I found some of the things that I ended up just being passionate about en route to finding that answer I was looking for. And so that's why I was just always look it up, find out for yourself. Like, if you want to ask me what I think, that's fine, but form your own opinion. Like,
Yeah.
and so actually getting in the habit of self-starting, doing it yourself, that makes you feel good. When you're learning something, it feels good to say, I want to know about X, and then go do it yourself, learn about X. That makes you feel good. And then, wow, I'm really curious about this thing over here. I'd never even thought about that. And then that chain it's a virtuous flywheel.
It's real ownership at the end of the day. And it's
It
easier
really
to
is.
internalize. Yeah.
Exactly.
I agree.
I never wanted my children to be interested in what I did.
Yeah.
I wanted them to find their own passions and their own muses. And that's what they all have done. And I just think that's great. They think for themselves. They're all super high agency people. And like, if you really want to have a fun life, that's the way to do it.
Totally agree. Last question I ask everybody. If you were mayor of New York, what's one thing you would change?
Wow. Wow. What would be one thing that I would change about New York? I think that my biggest change would be that I would find the funding, even if I had to have my beggar's bowl with all of the rich folk here, to make certain that all of our green spaces were meticulously maintained. I think of the High Line. I love the High Line. And when it was going up, people were like, "Why are they doing that? That's what a way, they should just put buildings there or whatever." And like Central Park, all of our nature parts of New York. I mean, this is a concrete jungle.
Yeah.
We need those spaces.
Totally agree.
And they should be pristine, and they should be beautiful, and they should be places where every citizen should be able to go.
I love
So that's what I would do.
There we go. I might have to have Barry Dillard on the show after this one. Thank you, Jim. Appreciate you coming on.
Thanks for having me on.
Happy 4th.
Happy 4th.